How has it helped you in looking at the overall portfolio and perhaps making portfolio allocation decisions?
So if you look at Dow as a corporation and who's Dow's peer in the chemical world, it's tough to find any one competitor out there that has the exact same product mix that we do. So what we do is we look at our plastics business, our coatings and our monomers business, our consumer business separately, and we benchmark them against their peers in the industry. That gives us a perspective on whether we're winning in the market or losing in the market. It also gives us a perspective of the relative rate of growth of these different businesses, and then we can use that to help make priority decisions. Someone's got a near-term opportunity that may be not in the financial plan, but has demonstrated some really great EVA momentum growth, then they're more likely to get us to give them the additional resources to continue that streak versus somebody that hasn't demonstrated the EVA momentum growth.
Yeah, I like to call it separating the surfer from the surf. And it's
Right.
very easy to see a business that looks like it's doing great, but really it's maybe not doing so great against. So it sounds like combining EVA, or really more EVA momentum, which is a growth rate statistic and an analytical framework around that, with peer benchmarking, that combination is especially powerful.
Well, since we began that journey, we've delivered 14 consecutive quarters of EPS and EBITDA growth year over year, which is a pretty astounding streak when you consider that we're in an environment right now where oil prices have dropped dramatically over this last 2 years. And I think it demonstrates that the business leaders really have a grasp on what they can do to generate profitable growth. And when they don't have the ability to grow those volumes and variable margins, they then can turn to the productivity side of the equation and say, I have to manage costs. I have to get costs down. And at a bare minimum, I've got to manage my free cash flow. And so having the whole scorecard from an EVA standpoint allows them to look at the levers that are available to them and make trade-offs. And that's what the whole thing is about, is making the trade-off decisions that they have to make in that current environment.
Yeah, I mean, the attraction of EVA, I think, or one of them, is that if you're increasing EVA and you're covering the full cost of capital, then measures like sales and EBIT and EPS are of course going up, because EVA is actually holding you to a higher standard to earn that full cost of capital. So the other metrics kind of come for free if you manage to generate an improvement in your EVA profit. And as you said, if you're in a down cycle and profit's hard to come by, you can always squeeze capital and restrain investments, generate cash, buy back stock, and you can generate what looks like just a gain in EPS is really coming from a gain in EVA.
So that, exactly, in that 14 consecutive quarters I talked about, 10 of those quarters have been volume growth quarters. So it hasn't been just moving the pricing dimension or the variable margin dimension, but we've actually been driving volume growth and profitable volume growth over the last 10 quarters. And some of our businesses are on a streak that's 17 quarters long, like our plastics business. But we also tried to set some pretty simple metrics for the organization. We said a 1% EVA momentum on an annual basis. If I looked at this calendar year and said we could generate a 1% EVA momentum, that would be at or above the S&P 500. And that was a very simple metric for us to use internally to say, we want to be better than the average of the pack. So we need to generate that kind of an EVA momentum. When we started this in 2013, I would tell you that half of the businesses were above that metric and half were below. Now we're at the point where all but 2 of the businesses are above that metric. And so over time, as each of the businesses gets more seasoned in how they use the tools, you can see they all have the ability to make an improvement, regardless of where they are in their economic cycle or where the world is in the economic cycle.
Because the beauty of EVA is it keeps an overall score without dictating how you win. And so it allows each business to figure out the path of least resistance. And I think that's had a particular benefit in your planning process, where you aim the entire planning process around how do we as a team drive the most growth in EVA. So you have one common score and goal, but each team can figure the best way to do that.
Exactly right. And when you look at what that business needs to improve, and it doesn't mean necessarily that a business won't get funds to improve itself on an EVA momentum scorecard. It's just, where would you put the funds? Maybe it's not a capital investment that business needs. Maybe what they need is more resources to go sell more product in a certain region of the world, EVA momentum helps you make the case for that investment.
Yeah, we've seen that happen all the time in our work where, businesses oftentimes are put into compartments. And for your
Right.
return challenge business, you're instructed to tighten the cost and capital screws and you kind of ignore growth. But if you're looking at momentum, you do the cost and capital, but you also look for pockets of opportunity that you can exploit to add to your economic profit pool.
So in our building and construction business, when we came out of that financial crisis, this was not a very robust building and construction market. I mean, our business is split between commercial and residential construction. And as you know, even today in residential construction in North America, we're 70% of where we were in the 2007-8 timeframe. Yet that business has continued to generate EVA momentum. They made decisions about right-sizing their footprint. And at the same time, we've spent capital to move assets for different products into growing regions of the world. But we've titrated the amount of capital that we've spent and balanced that with the near-term results that they're trying to generate. So even without what I would call a robust housing market, that business is setting record performance from an EVA momentum standpoint.